Deepseek, a Chinese AI startup, has recently made significant advancements in artificial intelligence, particularly with its latest model Deepseek R1. This model has demonstrated performance comparable to leading US AI models such as OpenAI's GPT-4, but was developed at a fraction of the cost. Approximately $5.58 million over 55 days. Deepseek is a Chinese company, and just like any other Chinese company, they create product cheaper, faster, and better. They developed the latest model in approximately 55 days at a cost of around $5.58 million. Shocking to most of us, because in 2023, ChatGPT development and training were significantly more expensive, with estimates ranging from $50 million to $100 million. It is said that Deepseek costs 98% less to build compared to ChatGPT. Now, we have a real problem. Now, it has already claimed the #1 spot on the App Store. Compared to OpenAI, Business Insider reported that the company spent $700,000 daily on infrastructure alone in 2023, with projections for 2024 nearing $7 billion annually for training and inference. Deepseek's new R1 model matches or beats OpenAI's performance while being free and open source. What makes it even more interesting is that Deepseek is run by a quantitative stock trading firm called Highflyer. By 2021, the firm had channeled its profits into acquiring thousands of NVIDIA chips, which were used to train its earlier models. The market has reacted negatively, with NASDAQ 100 futures down more than 1,100 points, marking the biggest one-day loss since September 2022. Deepseek has become a major threat to us large-cap tech. Deepseek's rise is worrying the U.S. market for a few reasons. 1. Challenges to U.S. AI leadership. Trump said he will make America the capital of crypto and AI, but Deepseek's fast progress challenges the idea that the U.S. leads in AI. Its success shows that big AI advancements can happen without huge resources, raising doubts about us. Export controls aimed at blocking China from advanced AI technology. 2. China's ace card against tariffs. Deepseek is amazing not just because of its features but for its political impact. While Trump plans to hit China with tariffs, China isn't fighting back with more tariffs. Instead, they've responded with a product that's cheaper, faster, and better, directly competing with top U.S. products. It was launched at the perfect time, just 1 week before the tariffs take effect. A truly strategic move. U.S. didn't see this coming. Deepseek's breakthrough AI model is more than just a technological leap. It's a strategic victory for China. 3. A threat to U.S. tech companies. Deepseek's efficient and cost-effective approach to AI development has led to significant declines in the stock prices of major U.S. tech companies. For instance, shares in NVIDIA, a leading AI chip maker, fell by 9%, while Microsoft and Meta experienced drops of 4%. This downturn reflects investor apprehension about the future profitability of U.S. tech firms in the face of more affordable AI solutions from competitors like Deepseek. The market now thinks AI companies are overpriced, so investors are choosing to play it safe. For the past 2 years, AI has fueled the market. For example, OpenAI recently closed a funding round at a $157 billion valuation in October 2024. $157 billion to build a better large language model, while China only needed $5.5 million. Now you know why it is a threat. Imagine the market running out of fuel. The rise of Deepseek has introduced volatility into global markets, prompting investors to reassess the value and future investment strategies of U.S. tech companies. 4. Cheaper AI development. As investors realize that AI development might not need massive spending to be successful, they are selling shares in companies that have invested heavily in AI, causing stock prices to fall. Companies like NVIDIA, which sell expensive AI hardware, have seen their stock prices drop because people fear demand for their products might decrease. Also, Deepseek can create AI models similar to ChatGPT, but at a much lower cost. This raises concerns that U.S. companies like Microsoft, OpenAI, and NVIDIA, which have spent billions on AI, might not be as competitive. If Deepseek can do the same thing for less money, investors worry that U.S. companies won't make as much profit as expected. For instance, Deepseek R1's API costs just $0.55 per million input tokens and $2.19 per million output tokens, compared to OpenAI's API, which costs $15 and $60. In short, Deepseek is showing that high-quality AI can be built for much less, making investors rethink the value of U.S. tech companies that have spent heavily on AI development. But it also raises the uncertainty about the future. Deepseek Rise challenges the belief that the U.S. will dominate AI. If a Chinese company can compete so effectively, it could change the balance of power in the AI market. This uncertainty makes investors nervous, leading them to pull their money out of AI-related stocks. Deepseek's rise is a warning for us policymakers. Tariffs used to help control global trade, but China compete more through technology instead of trade barriers. A big trade war is less likely to happen soon. It's something we haven't seen since the Cold War. AI is the new space race.